Hey everyone, welcome back to the channel. It's Sebastian Boyer, the approved guy, and on this live stream today, we're going to continue our conversation about the whole life insurance saving strategy, and we're just going to continue with talking about insurance and some of the different uses for insurance. Last time, we really talked about whole life insurance and the different benefits and features of using a whole life insurance, which is basically the infinite banking strategy, using it as an alternative savings strategy where your money is safe, it is protected, it's secure, but it's guaranteed compound interest growth. It is still liquid through policy loans and all the benefits of doing that. But this video today, we're going to start off looking at first just talking about term life insurance and when and how to use term life insurance. So without further ado, let's go ahead and jump right into that conversation. So here we are at the website at the whole life savingstrategy.com, and we're looking at the section on what about term life insurance. So term life insurance is the least expensive way for you to purchase a death benefit. So if your focus is either to get the maximum death benefit for the least amount of dollars, or if you do want to practice a whole life saving strategy, but you just don't have the cash flow yet, and you want to secure and lock in your current age and health to purchase a policy, then you can purchase a convertible term policy and later convert that into a whole life policy. So with term life policies, you typically buy either 10 years, 10 years, 15 or 20 years. The max is 30 years that you can buy. The premium is level, so it stays the same for that time. The insurance does not increase. The death benefit is the same, and there is no cash value in that policy. So the point of that policy is to buy the maximum death benefit for the minimum cost of insurance. And if you make it a convertible term policy, then you can convert that into a whole life at some point throughout the age of the policy. And the reason that's so important is because, unfortunately, most people that buy term policies outlive the term policy. And so what happens is that term policy and the premiums become 100% lost to you, and they become 100% profit for the insurance company. So we want to make sure that we're thinking ahead, and we're setting up a policy so that we can convert it to a whole life, and we're not going to lose all those years of premium that we paid on a term life policy. So there's a strategy out there where there's agents or financial advisors teaching people and preaching that they should buy only term insurance and invest the rest in the market. And I'm someone who has experienced my own grandmother who bought into that idea, and she outlived her term, and when she passed away there was no death benefit, there was no insurance left. And then with her investments, that did not pan out. I don't know what they did with her, but anyways, bottom line is, if you can secure and guarantee a death benefit for the next generation, you should do that. And that leads us to the next type of insurance to talk about and to consider, which is final expense insurance. So if you're a senior citizen or between the age of 45 to 85 and you don't have any death benefit, you have no insurance, you're probably not going to qualify for a term policy based on your age and potentially your health. But what you can qualify for is a guaranteed issue whole life insurance policy. And the purpose of this is not to get a huge death benefit, but it is to get you a death benefit in the range of $5,000 to $50,000, so that on your demise, your expenses such as your funeral, any debt obligations, all these things could be covered by that death benefit. So this is not necessarily a generational legacy wealth play where you're trying to set up $1 million death benefit for the next generation, but this is something where you don't want your children to be worried about paying for expenses on your demise, and you want to have all that planned. And typically when you're setting up one of these policies, you're also going to be, itemizing your own desires as far as what type of funeral you want. Do you want it to be an open casket, closed casket? Do you prefer to be cremated? Do you want it to be in a church, or do you want it to be at the beach, or whatever your wishes are? This is a great opportunity, a great time to do that. And so setting up a final expense policy, if you are a senior citizen or an older person between 45 to 85 that's not in good health, so you may not qualify for a term policy, you can get a guaranteed issue policy for final expense purposes. And so that's something that you want to consider if you fit that box in that category. Now, the next category is going to be business use. So as a business owner, we kind of talked about it last time, you can borrow against your policy as an individual. So if I have a life insurance policy and I've designed it a whole life saving strategy policy for the purpose of building up the cash value, and I want to have that cash value stored and growing with compound interest growth, I can have that set up in the policy. And then at any time, I can borrow against 90% of that cash value. So let's assume I had $100,000 that I put into a policy and 90,000 went to the cash bucket. I could borrow 90% of that, and I can use that in my business, right? Now, the policy loan is going to be to me personally because I'm the owner of the policy, or to my trust. But I can then make a loan to my business from my personal, and I can use a third-party intermediary called Pigeon Loans, so I can document that, and I can then make that payback from my business to my person individually. I can make that a tax deduction to the business. So that helps to offset the interest rate on the policy loan. And so this is a great way to use a whole life insurance policy to fund my business or to grow my business. Another way is it could be for a key person policy. So a key person could be someone in the business that if they were to leave the company, it would have a detrimental effect or impact on the business. Maybe my top salesperson, maybe my top manager. And as an incentive, what I can do is I can offer them an insurance policy as an executive benefit and make them the key person on that policy. And I can divvy up, because I'm going to be the owner of the policy, or the business is going to be the owner of the policy. I can divvy up that death benefit however I want. I can give him a portion or her a portion for his or her family, and I could also be, or the business could be, a beneficiary of that death benefit as well. So as a business owner, I can be the owner of a policy on one of my key persons. That person is the insured individual, right? But the business or me personally can be the owner of the policy, and then I can declare who's going to be the beneficiaries and split that up however I want. But that cash value in that policy is also going to be available and accessible for the business. And if I'm the owner or the business owns the policy, I control the cash value and I control the death benefit. The person, my employee, the key person, they are the insured individual, the human being that is being insured. And again, this only works if they are a key person and I can show that they have a substantial value to my company, and that's why I'm purchasing a policy for them as a key person in the company. If I have a partner, this is another way you can use life insurance. When you are partnering with someone else, you can create what's called a buy-sell agreement at the beginning of the relationship. And if you purchase life insurance and you put your savings into the cash value bucket and it's growing with compound interest, you basically have the money in place that in the event that you and your partner decide to split, or for whatever reason it's not working out, that is a fund that can be used to pay off either partner. And so now it doesn't put you at a burden to financially come up with the amount to buy out or buy your partner out of the business. So through a buy-sell agreement and using a properly designed whole life insurance policy, you can create that fund to fund a partner buyout, which makes things move a lot more efficiently. It could probably save the relationship between you and that person, and it definitely would minimize any hardship or reduction in cash flow from the business, because that money would be coming from the policy. So that's another way you can use it in the business. It could be a key person, it could be a buy-sell agreement, and again, all of these things are things. The policy itself has the death benefit, which is potentially going to be left to that individual or to the business, and that plays a role into your succession planning. So your whole life insurance, it definitely should be a part of your personal succession plan with your family, but also your business succession planning. And then, of course, your money inside the policy in most states are free from litigation. So if the business has debt and for any reason it falls bad on the debt, the creditors or debtors cannot come after your cash value stored inside of your life insurance policy. And again, that's most cases. So if you are going to consider it for that purpose, you definitely want to verify for your particular state that you do have that protection. So these are just some of the uses for a whole life insurance policy in a business strategy. And then finally, it can be used as supplemental retirement income. So this probably is not going to be your only exclusive retirement income strategy, but it could be a supplement to your retirement plan. So you have options. You have the ability to spend without any reserves. You have the ability to enjoy your retirement, and this gives you an extra volatility buffer in the event that you're kind of breaking even with your retirement plan income. A better way to fund a retirement plan where you have guaranteed income would be with an annuity. And that is something else that we'll be talking about in the future. And so the whole life strategy would be a supplement to that. And of course, your other investments and strategies that you've put in play are all part of your retirement plan. But this would be a supplement to your retirement. It would not replace it. We don't want to do that. Okay. Now, estate planning. So this policy as part of your estate planning is going to be very, very powerful. With as far as estate planning goes, you'd be setting up a trust, and a revocable living trust for most people is what most people would do. Inside that trust, you're going to have all of everything, including your will, your testimony. You're going to have every rule and your health directives, your financial directives, and all of your assets should be in the trust. Your property, your title should go to the trust, and including the trust can own the insurance policy, and it can be the beneficiary of the insurance policy. And so when you do that, just like the trust owns all your assets and you own nothing, your same thing happens to the insurance policy. And so this is a way where now the death benefit does not have to go to probate, because it's going to be a death benefit to the trust, and then the disbursement of the funds from the trust will be based on your rules and laws that you wrote into the trust, and you can write if-then statements into a trust to disperse your wealth to your children or the next generation or the inheritors of the beneficiary, the death benefit. But the trust owns everything, and from the trust you're going to disperse it out. And again, part of that is you can require that your children or your grandchildren or whoever are going to become educated about this strategy and use a portion or some of the money to purchase additional insurance, thereby perpetuating the ongoing generational cycle of protecting and storing money in a properly designed whole life insurance policy for generational wealth. And so if you do it in your lifetime, that's fantastic. But if you can do it in your lifetime and teach your children and your children's children to do that through the will in the trust, then you're creating generational wealth and you're securing it through your will. It's amazing how these words actually work when you put the law behind them. And so that would be the way you use a life insurance policy with your estate planning, because that death benefit it becomes part of the next the next generation, what gets left behind. It's a wealth transfer, and you can equalize the inheritance. So if you have kids, brothers, siblings, everything that whatever you put into that trust is immediately executed without probate, and so that's a huge advantage. You can also designate some of your trust or beneficiary funding to go to a charitable cause. So you can split that up even to charitable causes. So these are so many benefits of using a whole life insurance strategic saving plan in conjunction with your estate planning. All right, so I hope that this is giving you some good value. Last week we did take a look at the hierarchy of financial needs, and that is something that I believe everyone should understand because it speaks to the human psyche and that we all have the same basic needs. And as we accumulate wealth and as we start to become responsible adults, then our needs change and we move up and down the ladder of this hierarchy of financial needs. And a whole life insurance saving strategy is the only tool that can help you to solve for all of these problems from the beginning to the end as a foundational part of your financial strategy. So to discuss that further, feel free to schedule a consultation with me. I'm happy to do that. Just book an appointment. There's no obligation or commitment to do anything. We can just talk about your situation. If you'd like to look at an illustration, we can schedule that. But initially, this call would just be to talk. And if you have questions, I'd love to be able to help you and answer your questions. So don't forget, check out wholelifesavingstrategy.com. And I look forward to speaking with you on a free consult. If this video was of value to you, please make sure you like, subscribe, and share. Please, if you are on the live stream, make sure you comment. Listen, guys, your questions fuel me. I will come back with so much more value for you if you participate and ask questions and make comments. And so I do look forward to the next live stream and spending more time with you. God bless you. Take great care and make it a great life.